couple other reminders to ensure that those attending virtually hear the proceedings and for the recording to capture the entire meeting. Please ensure that you project your voice and speak clearly. Please remember it is a formal meeting and therefore I myself have to watch myself. Therefore, do not refer to each other by first names. Apologies, Kelly?
Yes, Chair, and apologies from councillors Campbell, Mackie, Hunt and Room.
Thank you. And item 2 is to approve as a correct records the minutes of the meetings held on the 8th of December and the 5th of January. We have 2 sets. So will you take the first one, please? Thank you. And the second, thank you, Councillor Willis. All those in favour? Good. And the second set of minutes? Thank you. Second. All in favour, please show. Thank you. Items been brought forward. I have none. Declarations of interest.
I've received none, Chairman.
Thank you. 5 is to agree the agenda between Part A and Part B. That is part just A. So we move on to item 6, performance and financial management of the third quarter of 22-23. And Tony, take us through this, please.
Yes, thank you, Chairman. Good morning, members. I'm here to present the Quarter 3 performance report. The recommendations are detailed in the report in 2.1 to 2.6 on page 23. Firstly, I'd like to talk you through our revenue position. The forecast budget surplus as at Quarter 1 is £19,000. The variances making up this surplus are shown in Appendix A, and that can be found on pages 35 to 36 of the pack. The original budget includes a forecast to achieve £250,000 worth of vacancy savings. The current forecast is this will be exceeded by £202,000, mainly due to timings of filling the capacity building posts throughout 22-23. Temporary accommodation is under additional cost pressures. This estimated pressure has increased to a 250k adverse variance, which in the year has been mitigated from a contribution from the homelessness earmark reserve. The joint building control partnership with Mid Devon is showing a decline in income and increasing costs from the use of agency staff. This is due to the challenges in recruitment. We are forecasting the deficit for this council of £33,000, and this includes utilising the £50,000 contribution from the building control reserve. The largest variance in Appendix A is the £804,000 for the National Pay Award. This is over and above the £280,000 already built into the base budget. This pay award was accepted by the unions and backdated to the 1st of April 2022. The pay award is based on £1,925 for all full-time equivalents. Other inflationary pressures include additional fuel costs across our fleet of £104,000 and additional energy costs of £63,000. The collection fund reserve still has an £800,000 balance available to protect against future volatility. This level of reserve protects the council against a 40% share of a £2 million overall movement within business rates. Borrowing as at 31st of December is still £3 million. Slippages in capital spend for future years has enabled us to borrow internally more than we originally budgeted, and this has resulted in a £275,000 reduction in the loan interest payments. And it's proposed to place this into a new Treasury Management Reserve to mitigate against high interest rates in 23-24. Estimated year-end earmark reserve balances are detailed in Appendix B on pages 37 to 39. Now moving on to capital. We have overall capital variations to the 22-23 budget for this quarter of minus 3.3 million. These are detailed in 4.4.3 of your report, and the majority of these relate to slippages in capital schemes to future years. Also detailed in the same paragraph are 23-24 capital programme variations of 161,000 and 24-25 variations of just over 2.8 million. This 2.8 million relates to the material recovery and works unit refit, which was approved by full council in November 22. All these changes take the revised capital programme to just over 32 million. The breakdown of the funding of that 32 million is capital receipts and borrowing of 13.9 million, external grants and contributions 15.5 million, and our internal reserves of nearly 2.8 million. The revised capital programme, including all these changes, can be found in Appendix D on pages 43 to 46. Now moving on to Treasury Management, Debt Management and General Debtors. These are detailed in sections 4.5 to 4.7. I would just like to draw members' attention to an error in one of the tables. This is in 4.6.5 on page 30. So the comparison data for the 21-22 quarter 3 figures are incorrect. I just wanted to just run through those with you if that was okay. So for the council tax ones, the 21-22 column at that time of the year within the quarter 3 should be 1 to 2 years, 1,421,000, 2 to 3 years, 935,000, 3 to 4 years, 567,000, 4 to 5 years, 371,000, 5 to 6 years, 219,000, and over 6 years, 156,000. As you'll see, these are much more in line with the 22-23 figures. This gives a total of 3.669 million. And then the same for the business comparable years. So just running down the table, it should have been 223, 332, 95, 52, 40, 43, given a total of 785. Again, much more in line with the comparable figures for 22-23. The service plan actions and KPIs are detailed in Appendix E. And members, that concludes the presentation of the Q3 quarter report. I'm happy to take any questions.
Thank you. Members will note the changes from the strategy meeting. Was that from that meeting?
We spotted it before. I reported them at the strategy resources as well, but we spotted it before the meeting. So.
Yeah. Any questions, members?
I might sound a bit naive, but what's the UK Shared Prosperity Fund, please?
That is the new funding that we've just been successful in getting. So in total, we've allocated by government £1.2 million, which we've got to spend part this year, part next year, and part the year after. And the bits you see in the report is the small elements that they allocated to capital. The rest of the UK Prosperity Fund, which is just under £1 million, is revenue expended across those 3 years, which the Economic Development team will be spending in line with our grant plan.
Okay, thanks.
Any other questions, members? If not, move on.
Just need to move that
Do
chair.
we have to move it?
A little bit louder, because
Sorry.
this fan's right behind it.
Just need
And I
to,
got most of my hearing back now, it's still, without the,
just need to agree that we support the recommendations of strategy resources committee.
not just note, but to support.
I'll move, Chair.
Thank you.
Second.
Second. Very helpful. Thank you. All in favour, please?
Yeah.
That's carried unanimously. So if I scribble through my little bits of paper next. Yeah, again?
Yeah. Yes, thank you, Chairman. So I'm also here to present the fees and charges report for 23-24. The recommendations in the report are detailed in 2.1 and 2.2, and these are on page 49. The guidance this year was to increase some fees and charges by 5%, although some fees are set by statute and some are set nationally. Even though inflation is currently running much higher than the 5% increase, we've tried to be prudent and fair in the fees that we charge and the impact this has on our customers. The 5% increase has been applied to the following services: allotments, trade waste, cemetery fees, sports pitches, and pre-application planning fees. Since the report and appendices have been published, I do have a request from the crematorium that we make an amendment to one of the appendices and that is the cemetery fees, Appendix F. And they would like to change the fee to 0 for purchasing the right of burial for a child's grave. This would enable the council to claim the full fees back from the government, and it would move us in line with what they do with the crematorium fees. Other variations to the 5% increase include building control to be increased by 8% to ensure the income recoups the cost of providing the service. Land charges have no change to ensure that we don't over-recover on our costs. Environmental health fees, there is one change, and that's the introduction of a £110 fee for the requested food operator food hygiene revisits. Pannier Market, due to the current refurbishment works and the inevitable disruption due to the future High Street Fund project, the proposal is not to increase the charges for traders for 23-24. The bulky waste to increase as follows, so up to 2 items, up to £23, 3 items £31, and 4 items £38. This still keeps our prices in line with our neighbouring authorities and also allows for the 5% increase. The garden waste charge, full council agreed in November that the 23-24 charge at £55 per bin. The 23-24 estimated cost for the council providing this service is around £56 to £58 per bin. The dog waste charge, a strategic decision had been made to keep the waste charge the same for 23-24, pending a review of the pricing structure moving forwards. The net effect of all these changes mentioned in the report give a net increase in income of 183,000, all of which has been built into the draft 23-24 budget. Members, that concludes the presentation, and I'm happy to take any questions.
Questions, members?
Not a question, but a comment. Thank you very much for keeping the market traders, market prices the same, because I think that's a good way of showing to our market traders that they are valued and we want them back when the market is all nice and beautiful again. And also the dog waste charges, I think that's a very prudent idea to keep the dog waste charges the same, because parish councils are stretched as well, especially Fremington, who have the most dog waste bins in Devon. So I'd like to thank you for those 2 items.
Any other comments? Otherwise, is a proposition to accept?
Can I just ask, building control charges, where's the increases on here?
So there was an 8% increase in the fees,
Yeah,
and the idea of the 8% increase in fees was to cover the cost of, they put a lot of posts out for recruitment, and then I think we put a market supplement on those posts when they've gone to advertising, and the idea of the 8% increase was to make sure that we recover the extra costs that we'll be charging for our employees, assuming we appoint these posts successfully.
it's a bit of a chicken and egg thing to that really, isn't it, in a way, because you've got to charge more to recruit more, but if you charge more, it's less attractive for people to use, isn't it?
I think they in the past they've struggled to recruit their posts. So through HR, they decided to add a 10% supplement to the posts that they've advertised. And again, to then recover that cost, we've obviously put the prices up to make sure that the service still breaks even.
Do we know how successful that is?
I think they're all out at the moment, and
Yeah.
apparently early indications are that we have had some applicants, so
But they have been struggling, haven't
yes.
they? Okay.
That was a concern at the strategy and resources that we were just not keeping people or getting people, so we had to pay. And I think that is a problem throughout all local government. After 10 years of cutbacks, it's difficult to compete with the private sector who offer more money. Yeah, I could say a bit more about that, but maybe later on. But thank you. Proposal of acceptance, members?
Yeah.
Okay. So now going.
Sorry, Chair, just all those in favour?
Yeah, so,
Thank you.
so, Adam, is it?
Yes. Morning members, thank you, Chair. So a slight change to the agenda, we're actually going to move on and just run through the Treasury Management Strategy on the agenda. The Treasury Strategy looks at the impact our capital plans has on our borrowing and investments. The second table on page 151 shows our net financing need for each of the next 4 years. This is the shortfall funding to finance the approved capital programme, resulting in a borrowing need. You'll note that for 22-23, this is estimated to be 2.7 million and a further 8.5 million shortfall the following year. The total historic outstanding borrowing need is to finance the capital programme as known as the Capital Financing Requirement, or the CFR. This is a key measure of the Council's underlying need to borrow. The projections for the CFR are shown on the top table on page 152. This financial year is projected to stand at 24.5 million, increasing to 38.6 million in 24-25. The amount of borrowing actually undertaken to finance the CFR will depend on the amount of year-end resources and reserves that we're forecasting. In the current environment, it's still prudent to use some of these reserves and resources rather than borrowing it all externally from the PWLD. You'll see the table on page 154 that we're projecting to use funds to offset the borrowing by 17.7 million this year and 11.5 million next year. This is called internal borrowing. So our borrowing need, less the internal borrowing, is the amount that we actually need to go out and borrow externally for. External borrowing is projected to be 19 million by the end of 23-24, peaking at 26.5 million in 25-26. In October 21, we signed up to a leasing agreement for our vehicle fleet replacement. Whilst this cost increases the CFR, these schemes include their own borrowing facility. So this is borrowing is in addition to that we need from the PWLD. On your report, this is referred to as other long-term liabilities. This borrowing is projected to be 2.8 million in 23-24, peaking at 4.8 million in 24-25. There are two key borrowing indicators on page 158. The operational boundary, which is the expected limit of our external borrowing, and also our authorised limit, which is the maximum amount that we can borrow. The interest rate forecast have been provided on page 159. Bank rate now stands at 4%, and we will continue to work closely with our Treasury advisors to keep rates under review and to access the optimum time for borrowing. Moving on to look at our investment strategy, we're not proposing any changes to the way in which we make our investments. Being guided by the creditworthiness service provided by our Treasury advisors in terms of who we should be investing with and for how long. We then set the financial limits on those investments as shown on page 168 and Appendix A of the report. As always, our approach would be security of funds first, then liquidity before considering the yield that we can get. I would now like to refer members to the recommendations in section 2. Happy to take any questions.
What was the page of the last recommendation from? I was galloping on. Up here.
The actual recommendations themselves, Chair,
Yeah.
they're on page 147.
Just one more thing. I thought I tend to strategies and resources. I thought that chart on page 161 was useful. It seemed that the ship was still in a good state, if you know what I mean.
Yes.
No runaway problems.
Yeah, it does show that our borrowing is set to increase, but it is planned and it is managed.
Yes. Yeah. The cavalry has come to rescue me up the hill. Sorry about that. But it was a bit of a struggle, Certainly testing something and doing it. Okay. Anyway. Members, do we note and approve what we endorse?
Yeah.
Thank you. All vote. Thank you. So we move on to
Yeah,
the next one could be 20.
yeah, me again, I'm afraid, yeah. So the next item we're going to cover off is the 10-year capital strategy. The aim of this strategy is to take a long-term view of the financial stability of the council and to provide members with a financial context for making their future capital decisions. So the report is broken down into two timeframes. Firstly, we have the medium term, which has largely been covered off by the Treasury strategy and the budget report that you'll receive shortly will cover off the medium-term financial strategy. So I won't go over that again. That'll be covered off on your agenda today. But perhaps if we can focus now on the long-term years from 27 to 28, all the way up to 2032, 33. We have identified on the top of page 188 the ongoing financial commitments in terms of replacing our vehicle fleet after their asset life. Extending our financial projections and including these additional expenditure items, we can start to look at the impacts on our long-term funding. You'll see from the table on top of page 189 that our CFR, our underlying need to borrow to finance the capital programme, is projected to remain at a high level, although decreasing from 35 million in 27-28 to 30 million in 32-33. In the same way, our PWLB external borrowing is forecast to reduce, but will remain over the 21 million for the whole of the long-term period. Clearly, there is a cost to external borrowing, whether that's through the PWLB or through finance leases, which is a hit on the council's revenue budget. This cost is set to remain at circa 3 million over the long-term period, which will continue to add pressure to the long-term revenue budget gap. That's the sort of conclusion of that report, Chair. The recommendations for that one are on page 183. 183. Okay.
Any questions? You've almost concluded what we're doing. Are we waiting for John?
We'll just go on to get John, who's going to do the budget presentation.
Just one observation while we're waiting for John. I think the council tax increase is 2.99.
It is, yeah.
And when you think of it, because of inflation, it's a reduction. So, it swings and roundabouts, but to my mind, I think that's quite an achievement.
Yeah. Again, that will be covered off John's presentation. We'll go through the reasons.
I know there's a ceiling, but even so, keeping into that has been difficult.
Chair, we just need to agree. We just need to agree the recommendations.
Thank you. Seconder, please. Thank you. All those in favour? Sure.
It is interesting, however, that you're forecasting more borrowing, but reducing debt. I know that's, I'm not quite sure how you balance that out with, the example that was just mentioned, the fact that the recovery through rates is actually technically reducing because of the lower figure that you're inflating this time round.
Yeah. In terms of those figures, we've got the capital financing need, and you're right, that is reducing, largely because we are setting aside a sum of money each year as a sort of minimum revenue provision to pay back that borrowing. So that's why that line does come down over time, because when you set the borrowing, you have to then prudently set aside some of the money each year over the life of that asset that you're borrowing for to return those funds. So that's why the CFR is reducing. But yes, our borrowing does need to go up because the CFR is at a high level and we're forecasting some of our reserves reducing.
If I look at the interest rate, I think you said was 4%.
Bank rate is currently at 4%.
And then is that what what the council is effectively paying, or an element on top of that?
There would be, yes, a margin on top of that, yeah. And again, the forecasts that you'll see in the Treasury report, they are saying that the bank rate or the PWLB borrowing rate will remain high for the next couple of years, but then they are forecasting it coming back down again. So in terms of our borrowing, when we go out, we will probably look to borrow short term initially, and then hopefully when that matures, we'll look to fix it a little bit longer at a lower rate. That's the sort of borrowing strategy that we have at the moment.
So although the income from rateable value, for example, is going up by a smaller percentage, are we effectively saying that the growth in the housing stock, for example, is growing much more rapidly than that?
Not sure if we've got any.
This is on business rates or on council tax rateable value?
Sorry?
You're talking about rateable value in terms
Yeah.
of business rates coming into
Yeah.
the authority. So the rateable value obviously is going up with the recent revaluation. So that will provide additional income to us. Businesses are protected by that because there is a transitional relief scheme in place, so that obviously they won't see the increase themselves immediately, but we get compensated by government for the loss of income. So the income that isn't paid by the businesses because they're protected for a period of time, the government recompense us for any lost income that we would have received had they been billed back from day
That
one.
was the missing piece in my jigsaw.
Swings and
It's nice to come in and put the final piece of the jigsaw in.
Morning, John.
Good morning, Chair. How are you all okay?
Hi.
Apologies for being slightly late. I was on
Well,
the meeting.
Busy man, but know that. Over to you.
Are you finished on that item? Have you, or, oh, you're, so,
Yes, we're patiently waiting for you.
my apologies, sorry. You're just killing time in between. Well, good morning, members. So item number 8 on your agenda papers is the annual revenue budget, capital programme and medium-term financial strategy. There's quite a lot of detail within the body of the report. So as normal, I've done a presentation just to cover off those key points and hopefully explain on the key elements of the funding. First thing I'm going to do is just set the scene in terms of the national picture, in terms of funding to local government, and then how that affects us locally for North Devon. Is there any way that bottom right bit can be minimised? Just that's great, brilliant, thank you. Otherwise it just hides some of the numbers. So members, what this sets out is the government's funding position to local government since 2012. So back in 2012, government funding to local government was around 28 billion. It's dropped quite a lot over the period from 2012 to 2019-20, and then it started to go back up again, but nowhere near to the level that we saw back in 2012-13. And obviously since 2012-13, inflation obviously should have normally grown that further as well in that period. You would expect to have seen growth on that income. Back in 2012-13, you can see in terms of the colouring of the chart, there's quite a big chunk of black in this column, and that's where government gave a revenue support grant to councils, and that was guaranteed income. Over the period of time, that funding mechanism changed, and even though there was still an element of guaranteed funding from government, a large portion of that changed, and we started to see this blue block come in, and the blue block represents business rates retention. So that's where councils get to keep a share of the business rates growth, but also they are susceptible to business rate decline. So if we saw a lot of businesses fall out of North Devon, then that potentially does affect the level of income that the council would receive, rather than what it was like in 2012-13 when all of that money was guaranteed to the authorities. So not only did we see over the period of time that the funding had reduced, and to 19-20 that funding reduced by 33%, we also saw the mix of funding change in terms of there was more risk associated with the type of funding that came to local authorities. Since 1920, that has started to rise again, and we're now seeing an additional 2.9 billion come in from 22 to 23, but there's still an overall reduction since the period of 2012-13, and that's without taking into account the impact of inflation. In terms of how that funding changes in terms of numbers, and when the funding settlement is announced just before Christmas, which is the draft finance settlement, the government announced that local authorities will see an increase in their core spending power by by 9.2%. So that's national for the whole of England, and that varies depending on the type of authority you are and also the type of region that you're in as well. And how that 9.2% is made up of the different types of sources of income. So the overall funding that local authorities can receive is around 60 billion. And I spoke about 20 something billion in the last slide. That 20 odd billion comes from grants. And then there's also around 34 billion, which comes in from council tax. That third line down on this chart shows the level of council tax that comes into local authorities. So part of the council's spending power is the ability to raise additional council tax from a rise in the council tax base and also a rise in the level of council tax that we charge. So it's important for members to understand that the core spending power isn't 9% of new money that the government are giving us. That 9% does include the amount that we put the council tax up by as well. And then there is an element of new funding that comes into councils. However, the funding type changes as well. And where we see some positive numbers here in terms of new money, and 250% of new money here and 64% of new money here, that's money coming into social care and adult social care. So that's money that comes into local government, but that goes to upper tier authorities, that goes to the county councils and the unitary authorities. So that doesn't come to us as a district council. So even though there's core spending power of 9%, the type of money that comes to councils changes as well. So the upper tier authorities have gained, and we've seen reductions in some of the other types of funding, such as new homes bonus funding. Over here on the right hand side, we've seen a 50% drop in the amount of new homes bonus funding coming in, and we also see reductions in other grants lower down. So it's important for members to understand that mix in terms of how core spending power is made up, and also where the types of grants come into. In terms of the core spending power across the type of councils, so the 9.2% is across the whole of England, and that's over here on the left hand side. The core spending power for a district council of our size is around 5%. So it's not 9% for all councils. It varies depending on the type of council you are, because different councils can put their council tax up by different amounts. So the county council and unitaries can go up to 5%, whereas obviously we're restricted on the amount of council tax we can go up by a level of 3% or £5, whichever is the highest. So the core spending power for district councils is actually an average of around 5%. And we can see the line going across the middle, the orange line, that's the level of CPI inflation for the 12 months to November 2022, which was 10.7%. So core spending power increase of 5% for the district council, but actually inflation is running higher than that and actually almost double that by the time we were looking at it back in November. The 9.2% across the whole of England also varies by the type of region as well. So when we look at the 9.2%, the southwest is actually only going up by 8.8%. So if you think the 8.8% is lower than the 9.2%, and our average for a district council was around 5%, our real average is probably somewhere about 4.5% to 5%. So it does vary by region as well as the type of authority that you're running as well. So I thought it was important for members just to understand those key national messages before we start getting into local numbers. In terms of the finance settlement for the district council, this was announced in December. It was draft, and there was a consultation that ran alongside the draft settlement that was announced, and that consultation ran until the 16th of January. We responded to that consultation and set out our concerns around the level of funding for the council. Being a rural authority, it's obviously a lot more expensive for us to run services than it is for suburban counterparts. So we have responded to that consultation, and a copy of that is set out in your papers in Appendix F on pages 141 to 145. In terms of the key messages from the funding, the core funding in terms of revenue support grant and baseline funding, we've received an additional 150,000. Our rural services delivery grant stayed the same. New homes bonus, we've been awarded 448,000. That's £1 million less than what we were awarded in 22-23. We were expecting a drop anyway, because the 22-23 award did include some legacy payments from previous years where you used to get a cumulative effect of new homes bonus funding, and over the years that has started to drop off. The lower tier services grant of 134,000 was removed completely for 23-24, and the services grant was 116,000, which was 90,000 less. But on the positive side, the government did announce that they would award a funding guarantee grant to all councils to mitigate the effect of all the other funding changes. So where we saw some grants go up and some grants go down, the impact to us without any further funding would have been a drop of around £1 million on the council budget. So the government announced that all councils would receive a cash freeze in terms of the amount of grant they would receive, plus a 3% funding guarantee of additional 3% within their grant funding. So they gave us an additional 1.196 million as a one-off funding guarantee for 23-24. The overall net effect of adding all of those together meant that actually we had an extra £120,000 worth of funding compared to what we had in 22-23. So good that we didn't see a funding drop. £120,000 extra is obviously welcome, but when you'll see a little bit later on, we talk about the inflation pressures on the council and the pressures we've seen in the budget this year, the 120,000 doesn't really address the increased costs that we've seen as a council. So the consultation ran until the 16th of January, and we responded, and you'll see a copy of my letter back to the consultation in your appendix papers. In terms of the taxation income, district councils were allowed to increase council tax proposals for 23-24 at up to 3% or £5, whichever is the highest. The draft budget papers in front of you assume an increase of 2.99%, which is £5.93 on top of the £198.35 boundy level of council tax for the North Devon Council. In terms of how much extra money that brings into the council, it's an extra £272,000, of which £208,000 comes from the 2.99% and £64,000 from the change in the tax base with the average number of properties. So when we start looking at how much extra money the councils had, it's the extra 272,000 plus the 120,000 extra government grant funding that I talked about on the previous page. In terms of business rates, we get to keep an element of the retained growth in business rates, and we've drafted the budget and we've factored in £2 million worth of growth. That's growth that's built up over the years from 2013 when the new scheme came in, and that's made up of £1.5 million worth of growth. Plus, we get to keep all of the business rates on any new renewable energy schemes, and we get to retain a level of income through the Devon-wide pool where business rates are accumulated together. And if there's Devon-wide growth, then rather than all of that money going back to central government, we get to keep a share of that before it goes back to central government. And that's around 200,000. The challenges that we face, though, as a council, obviously are growing. Back in 2010-11, our budget was 15.5 million. That's our net budget. And the current year, 22-23, is 13.7 million. So on paper, it doesn't look as though the budget's gone down that much, 1.8 million, still a lot of money. But actually, in real terms, you would have expected inflation to be added on to the 15.5 million from 2010 up until today's date. And if we looked at CPI inflation, the budget for 22-23 should have been around 20.7 million. So actually, that's when you start to see how much funding has been taken out of local government since 2010-11. Coupled with that, we've also seen a reducing workforce, and also that's how we've had to bridge funding, bridging the budget over those years in order to put a balanced budget forwards. And we've seen a reduction of 20% on the workforce as well in that period of time. And moving forwards, we've got continued austerity measures. We don't know when the grant funding changes are going to be really making an impact on the authority's budget. There was talk of a major funding review coming up this year for 23-24, and I've been talking about it probably for the last 4 or 5 years when I present the budget. We think now that's coming in 25-26. We don't think it's going to happen in 24-25. And we think 25-26 is when that's really going to impact the budget. And you'll see later on when I talk about the future year figures, how that potentially changes the financial landscape. So the inflationary pressures we've been seeing on the budget this year also then feed into the budget setting for 23-24, because it's not a one-off cost, it's an ongoing cost. And that's where we've seen increases in staff pay, increased energy prices, increased fuel prices, and also third-party contractors passing on their increases onto us when we buy in their services and goods. It's the medium-term financial strategy, and you'll recall seeing this slide when I talked about the budget back in November for council. We were looking at a £1 million extra cost here in 22-23 from the inflation pressures being faced in 22-23 from the approved staff pay award that has now been approved, increased fuel and energy prices, and we were looking to fund that £1 million from the budget management reserve. So a one-off payment from our budget management reserve to bridge the budget pressures this year, which meant that we were still putting forward a balanced budget position, And from the report you've received from Tony earlier, the Q3 position, that's reporting a small budget surplus of around £20,000 in the current year. We held a couple of budget workshops with members because we were faced with that £1 million pressure moving into the budget for 23-24, and also we're likely to see further inflation pressures over and above what we were originally projecting for 23-24. So we were looking at a £2 million budget gap for 23-24, growing to around £4 million by the time we get to 25-26, and that's where the fair funding review changes are being projected. So we've had a couple of budget workshops with members, and we brought a report to you in November at full council, where you approved a number of measures to try and bridge the budget gap in advance of the detailed budget setting taking place. And that was around reducing some contributions to reserves, agreeing some fees and charges increases for 23-24, such as garden waste and fees and charges for car park charges as well. And you approved those at your full council meeting in November. So the summary position in terms of those options that you considered, they're shown in your budget report, and that table just sets those out. So the fair funding review we assumed was going to be moved down the line, and that brought in an extra £500,000 worth of funding to readdress the funding balance in terms of government funding. We saw some changes in terms of national insurance impact on the budget, some growth in the level of income from recycling materials. We invested some capital money to redo the lighting within council offices and put in more energy efficient lighting. That would reduce our energy costs by around 29,000. The review of car park charges and garden waste charges, bringing in additional income of 450,000 and 90,000. The discussions that we were having with towns and parish councils around transferring public convenience responsibility over the next couple of financial years would bring about a financial benefit to the budget. The increase in capital acquisitions of property for use as temporary accommodation, and a report was approved at Strategy and Resources on Monday to further the capital programme by another £2 million to buy potentially up to 8 units of accommodation. That reduces our reliance on the more expensive bed and breakfast accommodation and is a net benefit to the budget of around £10,000 per unit of accommodation. And also reducing a couple of contributions to reserves, put forwards measures of around £2 million to bridge that budget gap for 23-24. So we identified a £2 million budget gap, and those options bridged that budget gap by 1.9 million. And then Adam and the team were working on the detailed budget setting through December and January. You received the service plans from heads of service at your last meeting, which included some changes to the budget in terms of some of those actions being brought forwards. And that's culminated then in a balanced budget position being put in front of you today for consideration and a refreshed medium-term financial strategy. In terms of the council tax for the authority, for 22-23, the current year, this time last year, you increased the band D by £5, which was around a 2.6% increase. We could, for this coming year, put the council tax up by £5 or 3%, whichever was the highest, without the requirement to hold a referendum. And the recommendation is to put forward a 2.99% increase, which puts £5.93 on the current band D council tax and would increase it to £204.28. That's only our share of the council tax, and at the bottom there it just shows where the remaining shares come from. Quite a large chunk of the council tax that goes out on the bill, it goes to the Devon County Council, 11% to the Police and Crime Commissioner, an amount to the Fire Authority, an amount to the towns and parish councils, and each of those precepting authorities will be putting forward their budget proposals, and that will culminate in the council tax resolution coming back for your consideration in 2 weeks' time at the full council meeting. Just wanted to touch on Green Lanes, because this time last year we'd just bought Green Lanes. We'd had it in our ownership for a couple of months when we put the budget forwards. You'll recall when we closed the 21-22 accounts, I reported that we had a positive net return of 243,000 for the 4.5 months ownership. That's because there were minimal borrowing costs within that first 4.5 months, because the majority of the borrowing costs start in 22-23. We placed the extra money from Green Lanes at the end of last year into 2 reserves, an income volatility reserve to help protect the budget if we see a change in tenancies and we see a reduction in rental income for a period of time. That reserve just helps to smooth the budget over the period of time that the changes are taking place. And 168,000 into a corporate property initiatives reserve, so that if there are changes in tenancies, That gives us a chunk of money to be able to turn those units around quickly in terms of legal costs, marketing costs, and also what we call white boxing, to be able to make the unit lettable in a good state so that somebody new can come in and take that unit on quickly. I'm pleased to report that the current year performance is in line with the budgeted position that you approved this time last year for Green Lanes, and also the latest forecasts for next year, 23-24, those cash flow forecasts are also in line with what we set out when we put the financial modelling forwards for the shopping centre. So really positive that the shopping centre is holding itself financially and also operationally, and we're working with potential tenants to fill the empty units that we've got there at the moment as well. So the draft revenue budget then is set out in your papers in Appendix A on page 131. That just shows a summary of the net budget position. So we have a net budget of £14.7 million. That just shows how it's funded. We've got over half of that coming from council tax, 7.3 million. We have the baseline funding on business rates of 3.1 million. Our growth on business rates income of 2 million. And it's this growth figure of 2 million. This is the part that's at risk when the fair funding review comes forward, because that's the bit that the government want to reset and put that funding back into national funding and then recirculate that back to local authorities. Now, to me, that sounds like £2 million will go back to government and we won't get £2 million back. Some of that will go off to other priorities, and we'll get some of that back as part of funding, but not necessarily all that we lose. So the medium-term financial strategy figures do project that, and it projects that negativity happening. But we wait to see what comes forwards from government as part of that fair funding review. We've then got some smaller grant fundings coming in. At the very bottom here, the funding guarantee grant of 1.2 million that readdresses the shortfall in government funding for this year. So members, that's a balanced budget of 14.7 million with 14.7 million pounds worth of funding. In terms of the assumptions within that budget, we built in an assumption of a 4% increase on salary costs for 23-24. This time last year, we put in 2% into the budget. The previous year award for 21-22 was a staff pay increase of 1.75% that was approved. 22-23, we've seen a cash award awarded for staff of £1,925, which for the lower paid staff on, say, around 20,000 a year, that equated to about a 10% increase on their pay. For staff earning a bit more, that percentage comes down, with the highest award around 4% for the higher salary earners. So we built in 4% to the salary costs, and also that energy prices remain at similar levels to what we're experiencing in 22-23. So there are risks associated with that, because at the moment we've had the pay claim come in from the unions, and that was the call I was on before I came to this meeting. The pay claims come in, and the unions are asking for RPI inflation forecast for next year, which they're forecasting at 10.7%, plus they would like another 2% on top of that. So the ask from unions is around 12.7% at the moment, which obviously in terms of affordability would be quite challenging for the authority moving into 23-24. So those negotiations will obviously continue between the national employers and the unions, and there's a process that goes through before we agree in terms of what that settlement will be. But that's just highlighting the potential risks of the budget in 23-24. We have factored in a 2.99% increase on the Band D council tax. The fees and charges have a general uplift of 5%, which you've seen in the previous report that Tony has presented to you. And your previously approved garden waste increase to £55 that you approved in the full council meeting in November. We are proposing no reductions to strategic grants or the councillor grants, and they remain the same for 23-24. We also, as part of assisting, we obviously work with the voluntary agencies to make sure that they are operating fine. There's been no calls from those agencies for additional funding. I think they would all welcome additional funding, no doubt. But the fact that we are not reducing grants is a positive message to those organisations. Obviously, they're seeing inflationary increases as well. We are also working with the CAB. We obviously are giving the proposal that the grant stays the same. They were previously in accommodation at Bridge Buildings. They were looking for new accommodation, and we've actually agreed with them that they will be housed in Linton House with our staff. So the CAB are now working out of Linton House. We're providing them with a reception area as part of our one-stop shop. and that's at a much reduced rent to what they were paying in their previous occupation at Bridge Buildings. So that's actually been a financial benefit to the CAB at a time when obviously they've got increased pressures. And it also works really well because a lot of the clients that see the CAB are the same clients that want to see our staff as well. So there's a really good correlation there in terms of a model moving forwards. I've talked about assumptions and risks with the budget. Those grants are shown also in your Appendix B papers on page 133 of your agenda today. In terms of the level of reserves for the authority, they're set out on pages 135 and 136. We have a general fund reserve of 1.2 million, which is around 8% of our net budget. And the recommended level for district councils of our size is between 5 and 10% should be your level of general fund reserve. So we're on the right side in terms of our general reserve. Our earmark reserves are shown in the Appendix C and show a forecast balance at the end of next year of 5.7 million. Just going to run through some of those in terms of the resilience that provides against the budget. So if you have got Appendix C in front of you on your appendix papers, I'm just going to talk about a couple of those reserves. The first one at the very top is the collection fund reserve, which has a forecast balance of just under 800,000. That collection fund reserve is set up to help mitigate if there's any volatility or fluctuations of business rate income. So we budget for a certain amount of business rate income. As I touched on earlier, there is potential risk that business rate income, as well as it can grow, it can also go the other way. And what we see is this is a reserve that helps protect the budget if we see that volatility during the year, and then all of a sudden the budgeted level of income doesn't materialise in terms of what actually happens in the year. The 800,000 in the collection fund reserve, 40% of the business rate income comes to this authority. So actually the 800,000 in the collection fund reserve equates to 40% of around a £2 million drop in overall business rate income. It's quite a healthy protection against the budget by having that reserve there. The second largest reserve in your papers is the budget management reserve, which has got a forecast balance for next year of 536,000. That reserve balance is there to help protect the budget against increases in terms of inflationary pressures like we've seen this year. We used 936,000 of that reserve in the current financial year, and that was going to wipe the reserve out. But through some careful budget management this year and redirection of some additional revenue that's come into the authority, we placed that back into the budget management reserve as part of the Q3 performance report. And that gives the budget some protection in 23-24 by having that money there. If the pay award was higher than the 4% that we built into the budget, every 1% equates to about 170,000. So that budget management reserve does give us some protection, not a lot, but if all of a sudden the pay award was 5 or 6%, there is sufficient protection there for an in-year use of the reserve to help pay the additional cost if that didn't materialise. But it's also there to cover off any other inflationary pressures, such as additional fuel costs, additional inflation over and above what we've already built into the budget. I've already talked about the Corporate Property Management Initiative Reserve and the Income Volatility Reserve, and I talked about the green lanes. The other reserve that you have, which I think was talked about earlier when Tony and also Adam presented their reports, was we've set up a Treasury Management Reserve. Because we're not borrowing so much money externally this year, we've put £275,000 of the reduction in borrowing costs into a specific reserve. And what that enables us to do is have that reserve to be able to drip feed into the budget over the next 2 years, and that mitigates against increased borrowing costs through increase in interest rates. So the reserve allows us to move that money into the budget and just smooth that effect with those increases in interest rates over the next 2 financial years. So members, one thing I have to do is obviously assure you that that level of reserves is adequate and gives the authority some protection over its budget, and also that the budget estimates in front of you today are robust, and a draft balanced budget is put in front of you that I am comfortable with. In terms of the medium-term financial strategy, that model is now being refreshed further from the figures that you saw back in November. We are looking then at a draft balanced budget for 23-24, which shows a zero budget gap for next year. That budget gap increases to about £500,000 for 24-25 because we've assumed the level of government funding we've received this year will be similar for 24-25. Now that could be quite an optimistic view, because government may turn around and say, well, actually the funding guarantee we've given you this year, you're not going to have for 24, 25. But everything they're talking about is talking towards the end of the current spending review period, which is 25, 26. So if they've given that protection this year, we're pretty sure they're going to give that protection for 24, 25 as well. And it's 25, 26, the year after that, is when they'll start to make any changes that they may bring forwards. So we've assumed the same level of funding. The £500,000 budget gap does assume certain things. What it assumes is that the fair funding review is planned for 25, 26, and that's when we potentially see a £2 million drop in terms of government funding, and that's why the budget gap increases from £500,000 to around £3 million for 25, 26, because of that funding drop. We've assumed going back to a 2% increase in employee salaries from 24, 25. Obviously, we've seen 22, 23, and I just talked about the potential increase for pay claims for this year. We're assuming that things will settle down and go back to some form of normality on inflation for 24, 25. How optimistic that is anyone's guess, but we would hope by 24, 25 things start to get under the control a bit more in the economy. But the risk is that the increase in employee salaries will be higher than 2%, and therefore every 1% higher than that will be a further 170,000 added to the pay bill. We've assumed an ongoing 2.99% increases in council tax, and also the separate adoption of a separate 100% premium on second homes on council tax that was approved at Strategy and Resources meeting on Monday. That will go to full council in 2 weeks' time. And that's around bringing forwards the empty home premium that currently we have to wait for 2 years to be able to bring that premium forwards. That will be bringing that forwards to 12 months. And also the separate adoption of charging 100% premium on properties that are unoccupied but substantially furnished, which is obviously something we're not able to do at the moment. That's part of the Levelling Up and Regeneration Bill, which is waiting royal assent. It's gone through government and it's waiting to be approved through the House of Lords. We hope that will come forward shortly. By approving it by Strategy and Resources now, we have to give 12 months notice if we're looking to bring that in. So by adopting the premium recommendation now means that once that does receive royal assent, we can bring that additional premium in from April 2024. For us as an authority, that's about £4.2 million worth of extra council tax for the whole our area. Around 10% of that comes to this authority, which would be an extra £420,000 additional revenue to come into the budget. We've built that into these numbers at the top. So the current medium-term financial figures assume that extra £420,000 coming into the budget. Within your budget papers in sections 4.1.57 just sets out the budget gap and also what's not included in those figures shown in 4.1516 on pages 124 and 25. Obviously, we need to look ahead at 24, 25 and 25, 26 and start addressing that budget gap early like we did this year. And we need to look at where we can bring further income sources into the council and tie that in with our commercialisation strategy. The details behind those numbers and what makes them up is shown in your medium-term financial strategy, which is shown in Appendix D on pages 137 and 138. So that covers off the revenue budget. We've got a few updates on the capital programme, which I'll just run through. Be pleased to know that's a little bit shorter than the last few slides. So the capital programme that Tony presented as part of his report earlier set out investment of £32.2 million over the next 4 financial years. We've had 5 business cases come forwards for funding. We've had a business case for replacement and renewal of LED lighting in council assets. That's lighting on our car parks, it's lighting in on council assets, and also some retained street lighting that we somehow managed to retain when things like the transfer of the housing stock happened 20 years ago. So they're our responsibility. Some of those lighting needs replacing, so the 75,000 is phasing that over the next 3 financial years, and that's been put forward for funding. The water sports centre in Ilfracombe is coming to completion and is almost there. Just putting the last few blocks of the seawall in. The building itself is predominantly complete. Next to the building is the old lime kiln, which wasn't part of the original project, but once building work started taking place, we realised we could open up the old lime kiln and use it for some storage. And that's taken place. We've managed to fund that through the wider project. However, there is a link from the old lime kiln that potentially could link to the Watersports Centre building, because the Watersports Centre building is on the upper floor in terms of where the cafe operator is, with a balcony. And there is risk that people could go on top of the old lime kiln and try and jump onto the Watersports Centre building, which obviously presents a health and safety risk. And likewise, people could jump the other way as well. So there's an opportunity to regenerate the upper part of the old lime kiln and make it into a viewing platform, because it has fantastic views across the harbour, and would really complement the Watersports Centre. It would also provide a walkway from the Watersports Centre balcony over to the old lime kiln, and also provide additional seating for the cafe operator. So it makes the whole operation more viable, and adds a really good feature to the Watersports Centre. So that regeneration has been put forward as a capital business case for approval, and we would fund that through the regeneration reserve, where we put some additional money from the Green Lanes revenue over the last couple of years. We have also put forward, as part of the Ilfracombe regeneration plans, a £180,000 investment for additional toilets on the seafront at Ilfracombe. This is in the bottom sort of Capstone Hill area. There's no public toilets there. People used to use the toilets when in the Landmark Theatre, public toilets, but they weren't really set out as public toilets. They were really only for the theatre users. And also there were calls for an additional bus shelter as part of the seafront master plan. So that £180,000 investment has been put forwards, and we're looking to fund that through the Rural Prosperity Fund external grant that we've been awarded at the council. So not costing the council any money, but using the government funding that they gave us for improving and enhancing economic areas. Additional capital bid for car park resurfacing in 2 major car parks, one in Fairview and Barnstaple and the other in Brookdale and Ilfracombe. We've been doing spot resurfacing and obviously filling in potholes in car parks, but these car parks have got to the stage where really that's now gone past the sort of filling in stage. Those car parks do need a full resurfacing. The officers are just engaging with local ward members over the next week or two, just to make sure that they're fully briefed as to the reasoning behind that before it comes to full council for approval at the end of the month. And then finally, the annual disabled facility grants of the council awards those works £1.2 million, and again that funding comes through the Better Care Fund, fully funded through external funding, and provides much needed adaptations and £1.2 million worth of investment for 23-24. So members, those business cases were put forward for funding. They were approved by Strategy and Resources to go on to full council, and obviously are here for your consideration today. The gross cost of those business cases is £1.961 million, funded by £1.38 million worth of external grants, £111,000 from the regeneration reserve, £250,000 from the repairs fund towards the car park resurfacing, and then there's an increased borrowing requirement of around £220,000, and that's predominantly to cover the lighting 75,000, and the difference between the repairs fund reserve and the resurfacing of the car parks to take place. Yes, Councillor.
Can we go back one slide, please?
You, Chair, please.
Sorry?
You go through the chair, helps me.
I'm so sorry. Shall I continue?
Yes.
I'm looking at the items there of expenditure, and if I take the first one as an example, 75,000 for lighting, new safety testing and so on. That's an expenditure on essentially new equipment, LED lighting, for example.
Yeah.
What's the return on investment on that? What's the replay period on that?
There'll be obviously a reduction on the energy costs,
Yeah.
because obviously that lighting will be a lot more energy efficient. I don't know the exact figures. I don't think they put that in the business, in the paper I saw that came forwards. They talked about a reduction obviously in energy costs. We can find out from the team what they currently pay on street lighting in terms of energy, but there should be a significant reduction. I mean, obviously when we're doing the lighting here, the council offices, that was a similar investment of about 80,000, and that was going to save about 30,000 a year on our energy costs here. Obviously,
Two and a half, 3 years.
about 2.5, 3 years on the office ones. In terms of the street lighting, again, I don't know the exact percentages, but normally it would repay itself within 2 to 3 years, because obviously it's quite a significant reduction in terms of energy usage. And obviously that lighting is on, obviously, probably longer than it is on here during the day, I suspect, because obviously it's on during the night in a lot of those assets, because it's car parks, it's street lighting, etc. So I know the lighting does go off during the night, but it's on for quite a significant period from tea time. So payback time probably very similar to what it is for the office ones, so maybe 2 to 3 years.
And the products themselves tend to have longer life than the old filament type.
Absolutely,
So that would an ongoing.
That'll be a saving as well in terms of, like, say, having to replace those lights at a more regular interval than we would at the moment. So yeah, it'll be
The cost of making those changes.
absolutely, yeah.
Councillor York, then Councillor Bowyer.
Whilst we're on that slide, thank you. Can I ask why we're investing in public toilets, was we're trying to offload the others?
I come forward. So this was, I mean, we previously used to have toilets at the bottom of Capstone Hill, we go back years and years ago, when the old theatre used to be there was a block of toilets there. And there's obviously lots of seaside undertakings and things that happen on the seafront. Now, over the years, there's been requests for additional toilets. We've always said, well, we're not putting more toilets in because, like you say, we've got enough toilet blocks in Ilfracombe. We can't increase our revenue expenditure on maintaining toilets. This has come through as part of the seafront master plan for Ilfracombe, so actually there is a need for toilets there because there's a lot of activity in the summer months, a lot of visitors. They obviously aren't using the landmark theatre toilets anymore. Therefore, the nearest toilets were down there used to be some on the cove, they closed. Obviously, the nearest one's now down on the pier for them. So the request has come through, and obviously through the town council as well, to have these toilets. They did put some temporary ones there last summer, I think the summer before, when the town council paid for those and also paid to maintain them as well. So we've made it very clear that this investment, even though it be funded through the external grant that we're getting through the Rural England Prosperity Fund grants, therefore no cost to us, if it does come about, then we wouldn't be taking on the responsibility for those toilets.
Okay.
They would form part of the same transfer over to the town council to take responsibility. So that's been made very clear, that if the toilet did come about, town council would pick up the maintenance and ongoing responsibility.
And
for those.
so would district council be involved in, if you like, planning the toilet box, so it actually is a more modern layout so that we can avoid like things like ASB going on in there and.
Absolutely.
Yeah.
Obviously,
Yeah.
we're aware, obviously, of some of the challenges with the toilet block, obviously, that we've got, say, in the cattle market toilets.
Yeah.
This would obviously be designed in a way that it would try to minimise
Yes.
those ASB
Brilliant.
issues that
Yeah.
we've had. I think if we were redesigning the toilet blocks now that we designed 20 years ago, we wouldn't be designing them in the way that we have with single door cubicles, etc. It would be more open access, so like you say, it reduces that risk of ASB taking place.
Councillor Walker.
The old lime kiln regeneration, I think that sounds like a fantastic idea. I mean, the views in Ilfracombe from that point are absolutely fantastic. And great to see that we can use money from Green Lanes to support the whole of North Devon, not just Barnstaple, which is fantastic.
Absolutely, yeah, that was the whole idea behind.
Appreciate it.
Yeah, that was the whole idea behind that. When we said we'd use some of the Green Lanes money and put it into regeneration reserve, it wasn't about it must be spent in Barnstaple, it was about the wider benefit of North Devon. So that obviously is a really positive. What we're hoping to possibly try and do is maybe also fund that one from the same Rural England Prosperity grant, if we can, because then it means we don't have to use that reserve. But either way, we'll be looking to put that money into Ilfracombe. So again, it's good to be able to support the wider district, not just putting money into Barnstaple.
Councillor Bowyer.
I was going to ask what Councillor York has asked actually. I mean, it looks like Ilfracombe is doing extremely well out of this. They've got, what, 600,000 coming their way?
They set that recently, didn't they?
But I can see they need all the help they can get there.
Yeah, and I think it's positive because, like you say, I think we often do get calls from certain members that obviously we don't spend enough in Ilfracombe and all the spend happens in Barnstaple. So I think this shows that whether it's funded from the council, whether it's funded from external grant, as we see with the Water Sports Centre, the fact that we're investing money into Ilfracombe is really positive. So we are trying to make sure that we're fair and proportionate across the whole district.
I mean, do you get any from out in going east? There doesn't seem to be much money going that way to Southampton and Cholmondeley and all those places like that. Do they make requests for investment or not? And or
We
really,
do have
we're quite happy with what we've
requests
got.
come forward. I mean, obviously, we see quite a lot of money going through Section 106 projects and things. Obviously, that goes out to various parishes, towns, etc. But the team will work with all towns and parishes. So when we're looking at the Shared Prosperity Fund, the Rural England Prosperity Fund, obviously there's quite a lot of business support packages underneath that as well, which obviously supports the whole district. So that doesn't just cover the likes of Barnstable, Ilfracombe, and the major towns. It will cover everybody, every business that is in need. If there's something that obviously recognises business support, they'll be eligible to be able to come forward to funding for those as well. So any town and parish coming forward with any scheme, the team are always open to ideas about how these pots of money can be allocated.
I mean, there is just a perception, obviously, that it's all going to Barnstable and Ilfracombe and not going to the.
Councillor Jenkins.
John, you referred to funds coming from the Green Lanes project. That implies that it's in profit at the moment, is that right? Or how are you managing the income and of course the project has its own costs?
Yeah. So when we set the budget for the current year, 22-23, which was the first full year of having Green Lanes, I think I can set it out in the report. The net budget position was around a £340,000 credit back to the council. That's taking the total income in terms of the car park income and the gross rents. Once we take off the borrowing costs, and once we take off the asset management cost in terms of our cost of managing the asset, that returned a net contribution back to the council of around 300,000. Some of that came back into the council budget when we set the budget last year, but what we also did was put £100,000 as a revenue, as a contribution into reserves each year, into a regeneration reserve from that money. So of the £300,000 credit, we put £100,000 into a regeneration reserve as an annual contribution, and £75,000 into an income volatility reserve to help protect the ongoing revenue streams from the centre as well. So that credit coming back in has helped them put money back into reserves, and the regeneration reserve's now got a balance of 200,000 in it from last year and this year, which obviously then is going to help fund future regeneration projects. So I think that's a really positive message that we've invested in an asset. We've got Green Lane Shopping Centre, which obviously is positive for us strategically. But the revenue streams are actually now starting to pay for wider regeneration benefits in the wider district.
Okay, thank you.
John, renewable energy scheme. I think the council we want solar panels. Can we buy into the scheme? Do we get a certain percentage of money for it?
Yep, there's the team are looking. I mean, it's within the service plan, so obviously there's an opportunity for solar panels, whether we put them into part of the asset we've got, whether we've got on the roof of the building here. We can look at some of our council buildings and potentially put solar panels on the Pannier Market roof. Obviously, is one opportunity as part of the redevelopment there. The other opportunity is obviously we own other land here as well. So we are looking at that, and Mark and the team are looking at the business case behind that. Because obviously there is a capital investment, but obviously there is a revenue stream there, and then also supplying our own energy and having some control then over the pricing moving forwards for providing our own energy. So we are looking at it, and it will come forwards in something in the near future.
We started this, in fact, not in this kind of time, previously, in Braunton, but then the pandemic came along and played havoc on what we're trying to do. Does it apply to parishes as well?
Yeah.
Oh, absolutely.
Yes, I mean, town.
I hope the chairman's listening, he's sitting over there.
Yeah, I mean, parishes, towns, parishes can look at schemes as well. Obviously,
That's good.
it has wider benefits because obviously it can help with your own energy supply and controlling your own costs in moving out, but also provide a revenue stream in as well. So we are looking at it. It's in its early days, but certainly it's on the service plans that came forwards for the team to look further into. I think obviously it's one of those things that you ideally would like to try and bring on as soon as possible, but it's quite a big project to bring forwards with all the other projects that the teams are doing. But it's certainly been part of the plans in the service plans that you saw last month.
Thank you.
On that subject, on the domestically, people can get a feed-in tariff as part of the benefit to help pay for it. Does that apply to these projects? Or are you going to invest in storage so that you get better returns on electricity in the full 24 hours of the day?
The scheme's changing all the time, I think, so I think, Council, I think probably will jump in there, won't you? in
Yeah,
terms of the
there
feed-in
is no
tariff?
feed-in tariff for
Yeah.
domestic customers now. We have solar panels and we get a SEG for the, which is a smart energy guarantee for, which is a payment for the electricity that we export. But there is no feed-in tariff on top of that now, as there used to be. On our previous solar panels, we got 43 pence per kilowatt hour that we exported. We now get that 3 pence for the price of the energy.
3 pence instead of the 24 that you're paying for it normally.
But it's still worth, it's
It's still-
worthwhile.
Really?
It's not as lucrative as it used to be, but obviously it's still worthwhile in terms of provision of your own energy supply, and obviously you just don't get the revenue stream that you would have got years ago. So, but the scheme is always changing. That's why it's important the business case comes forward so we can see those figures, because it needs to be making sure it's viable for the council if we're going to go ahead with a scheme like that.
It's just a pity that it was so successful, the government eventually sort of cut the reward for having it.
Yes.
Yes, yeah, we completed it, so.
Yeah.
Practice what we preach, you see.
Absolutely. So, Chair, that's the 5 business cases that have been put forward for funding. Obviously, I talked about the funding. They come through a project appraisal group where we score them against corporate priorities. Does it generate revenue streams? Is it reducing maintenance costs elsewhere? And then they're scored. All of those 5 business cases scored high. So none of them scored either medium or low, which shows they were ticking the right boxes in terms of rationale behind them. It's £1.9 million worth of extra investment in the capital programme, but really only increasing our borrowing need by about 200,000, which obviously we would need to do anyway, certainly for the car park resurfacing scheme. So it's a positive message in terms of the investment, and obviously a lot of that money is coming from external funding as well. So that's going forwards for full council approval, obviously subject to your recommendations from here today. That will go into the council report that comes in front of you in 2 weeks' time. So the draft capital programme is then shown with all the various schemes in Appendix E on pages 139 and 140. So that consists of the Q3 capital programme that Tony presented to you earlier, plus these business cases of 1.9 million, plus a separate report that came to members on Monday at Strategy and Resources for temporary accommodation in terms of investment in acquiring more houses for temporary accommodation. There is a net revenue benefit to that I touched on earlier in terms of saving on the more expensive bed and breakfast accommodation. So that's a total capital programme of 36.17 million, and the recommendation to full council is that the draft capital programme for those years be approved when it comes to you on the 22nd of this month. Details of those schemes are set out in your Appendix E. Just in terms of how the capital programme is funded, there's £36 million worth of investments. Around 16 million of that comes from either capital receipts that we bank, or external borrowing, or internal borrowing, where we're not actually going out getting loans, but we're borrowing off of our internal cash balances. £17 million of the 36 million coming from external grants and contributions. So that's quite a hefty contribution from external money coming in to help fund the capital spend. So that's a really positive message from North Devon, that there's £36 million worth of capital investment, but we're actually getting a good third of that. In fact, almost 40% of that is coming from external funding. So that's really positive. £3 million from reserves that are set up for capital schemes, giving you total funded capital programme of 36.17 million. Adam's already talked about the Treasury management strategy in his last report, so I won't go into infinite details around the Treasury management side of things, but this just shows our level of external borrowing that's forecast. So we're down here at 22-23. The big orange chunk at the bottom here is the level of external borrowing that we're anticipated to need to make. The blue line, the dotted line in the middle here, that's our capital financing requirements that Adam explained earlier. That's our underlying need to borrow. So that's how much money we need to borrow to fund the existing capital programme commitments. You'll see that we're not borrowing all of that externally, and the difference between these two is the level of internal borrowing that we do. So that's where we're borrowing against our cash balances, because that's a more prudent, cost-effective way of managing the investments, because it's more expensive to borrow money than it is in terms of the level of investment return that we're getting from our external investments. So that's covered off in the treasury management strategy that you would have normally had after this report, but you had it earlier, which Adam, I'm sure, brilliantly presented at your last agenda item. In terms of risks for the budget, I think I've covered those off in the body of the report, but this just sort of lists those. We talked about the level of government grant funding and the potential changes coming forwards, moving into those government grants. We've got key areas of income. So we have a car park income, which is quite a significant resource to the authority, planning income, building control income. Those areas of income are subject to volatility. We've seen growth in terms of things such as our materials, sales of recyclable material income this year. And that's been a positive move because inflation has benefited those prices. But sometimes those income sources can drop the other way as well. So we just need to be mindful that with any financial budget, they are estimates. Some of those estimates and assumptions can change as we move through the financial years. We have capital receipts assumed funding the capital programme. And again, we estimate those level of capital receipts. Those figures can change. Sometimes they can be better, sometimes they can be worse when it actually comes to bringing those capital receipts forwards. We have savings plans within the budget, and it's making sure that where we have savings plans, that we have the right mechanisms in place to achieve those savings coming forwards. We can't just put numbers in the budget and assume that they'll just happen automatically. There has to be something that generates those savings coming forwards, and it's important as a management team that we monitor and make sure that where we have identified savings, that they are coming forwards within the financial plans. We've seen an increase in demand for our services. So even though we've seen the budget reduce and we've seen our workforce reduce, we do see an increased demand for services, most notably housing, homelessness increases. That puts added pressure on the budget, not only in terms of the resources, but also the financial pressure that brings about. And that's why we're doing things like investing in our own properties to house temporary accommodation, because it's a much better outcome in terms of the well-being of the people that we're placing in there, but also it has a financial benefit for the authority as well. And then we have the welfare reform changes. We have localisation of council tax support, where we've made changes this year to provide more council tax support for the lowest income band, where you've made changes at full council before to give 100% council tax support now, rather than the previous 80%. So that hopefully is a positive step in terms of helping the most vulnerable with their council tax, and hopefully means that there is less bad debts in terms of having to chase those council tax that we were finding hard to recover. Business rates retention I touched on in terms of the volatility that can present itself with business rates income, and also there's further welfare reform changes all the time coming forwards that we just need to manage within the financial plans moving forwards. They're detailed a bit more in terms of beneath those risks within the body of your report papers in front of you. In terms of the timeline and where we are, we're obviously here at the 9th at the Policy Development Committee. The budget's already been through Strategy and Resources meeting on Monday, and I think you've now got the minute extract that's come forwards this morning from those meetings, setting out what was discussed at the Strategy and Resources meeting and the recommendations on to full council. We previously set the council tax base at your last council meeting on the 11th of January. That then will go forwards for full council tax setting when we bring that to full council at the end of this month. So on the 22nd of February, you'll receive the full budget and also then approve the level of council tax from North Devon. And then finally, Chair, the future options for your consideration. There are pressures on the budget moving into 24-25 and 25-26. So we need to be mindful of that and look at where we potentially can bring about additional income. Green Lanes has obviously been a positive step for us, not only operationally, but also financially. So therefore, we need to look at what other potential new opportunities are out there for the council. Can we acquire more properties for temporary accommodation, because that has a financial benefit, the demand is increasing, and it also provides an asset that will grow with capital value as we move forwards. And we also need to explore housing opportunities and ways that we can try and help in terms of delivery models for helping with the housing crisis. Obviously, we talked about temporary accommodation. We're quite limited as a council in terms of what we can hold houses for, because we haven't got a housing revenue account. If we wanted to hold houses from a commercial perspective, as well as from an affordable housing perspective, then we would need to look at different delivery models for that. And that would be things such as looking at maybe setting up a separate company for housing. A lot of councils have done that and explored that. Some have done it for development reasons. Some have done it for housing, holding a housing stock and then charging either affordable rent, social rents, or even market rents as well, and then reinvesting that money back into further housing stock. So we're going to explore those models. We're going to see what the pros and cons are, what the benefits are, and you'll receive reports back at future meetings around those opportunities. I've already touched on the increase to council tax from the 100% premium on second homes. We're waiting for the Levelling Up and Regeneration Bill to receive royal assent. If that does receive royal assent, and having approved that on Monday at Strategy and Resources in full council in a couple of weeks' time, we would then look to bring that 100% premium in from April 2024. And finally then, Chair, the recommendations in your budget report on pages 112, recommendations 2.1 and 2.2, and you also have now, I think, received in the last hour the minute extract from Strategy and Resources from Monday, which sets out what was debated on Monday and the recommendations on to full council. I'm happy to take any further questions, Chair, and obviously refer you to your recommendations in your budget papers.
Three of us.
Spoiled for choice, Chair.
The second homes element there, is that a significant proportion of the housing stock?
It's
100% as a premium has a multiplier on there that makes it attractive, but if the numbers are very small,
it's about 1,800 houses. So
what is that as a percentage?
What have we got? 30. Our council tax base is about 35,000. So it's about 18. It's about 5%. So not about 5%. 1,800. 10%, 3,500. Yeah, it's about 5%. So not as, but probably quite high compared to other districts, because obviously the area we're in, I think us and South Hams, West Devon, obviously have got a high number as well. So as a percentage, it's probably quite high compared to other councils.
So the multiplier of 100% becomes 10% back in value terms.
Yep, it comes, I mean, obviously they pay, anybody with a second home pays council tax at the moment already anyway, the normal rate. So this 100% premium, if we've got 1,800 homes at an average council tax of around 2,200, brings in about £4 million worth of extra revenue for the whole council tax. Of that £4 million, 3/4 of that goes to the county council, 10% comes to us. So we get 10% of the £4 million, which is about £400,000 for us. So quite a significant extra revenue stream. And obviously then it's for this council to determine what they want to use that revenue for. We've put it into the medium-term financial strategy, but obviously there may be housing priorities that this council wants to utilise that revenue stream for, to potentially mitigate the impact of obviously those that have second homes. I mean, the driver behind it is to try and reduce the number of second homes. Whether that will have the impact, because obviously 100% council tax and the benefit of having a second home and the extra revenue that the occupiers get will obviously be something for each to consider. But it's a start to try and bring about additional revenue back into councils, and also a start to try and address the impact of having those second homes.
Can I just ask a question? Definition of second homes. Does it mean someone outside North Devon District Council?
Could be anybody. It will be a property that is not their main residence.
Yeah.
So it won't be occupied. So because obviously if it's your main residence, then obviously you're occupying that property. So the definition is it will be unoccupied but substantially furnished.
Yeah.
So obviously at the moment, we're unable to charge obviously premiums on that. But if you've got a property that's substantially furnished, i.e. you're letting it, then it will be, that's the definition. So unoccupied.
That's the definition.
Yeah, the appropriate definition in the report that went Monday, and I'd refer you to have a look at the report that went on Strategy and Resources Monday, because that does set it out in a bit more detail. But the definition is it will be unoccupied property, but substantially furnished, other words. you own it, but you're not living there as your main residence, but you are then obviously using it and no doubt renting it out and letting it to people to come and use.
So rented places are rented places, not second.
Absolutely. Yeah, so if you own a property and it's rented, and obviously you've got a tenancy there, then obviously that's, under normal circumstances, then the tenant would be paying the council tax, but it won't be classified as a second home, it will be classified as a tenant property, and obviously they're paying the responsibility for the council tax.
Members, we need to,
We've still got further questions, Chair.
Still
There are
some
three
more
of us.
questions.
Who's next, Cindy or Louisa?
you were, but, yeah,
It's not very much to say. Actually, going back a few slides, you said external funding and grants, I think it says 16 million, it's quite a substantial amount. Is that principally government funding?
Predominantly, some will be contributions from things like Section 106 monies. So when we talk about external grants and contributions, predominantly most of that will be grants from government. So there'll be grants in there for, say, the Future High Streets Fund. So that's quite a significant grant, 6.5 million. There'd have been grants in there. Some of that would be for the early part of 22-23 for the leisure centre, the water sports centre. So some of the grants come from government, some will come from the South West Local Enterprise Partnership.
Yeah.
Some will be contributions from Section 106 funding that we've received as well. So that comes in under the contributions part. So it's a mix, but predominantly government funding.
And the other thing, I said, that housing you're looking into, I think that's an excellent idea. I mean, the temporary accommodation, is that just for, not to say, that local homeless, or does it cover the refugee situation as well?
It will do, yeah. We've got the, obviously, at the moment, the refugee scheme is obviously separate, because obviously we've got host families. But obviously, if any of those host family relationships break down, we do have a sort of a reserve list of host families. So that's obviously the first port of call, is that we would hopefully get people rehosted relatively quickly. If those relationships broke down and we have no further hosts, then obviously that potentially then becomes a demand on our temporary accommodation. So by having these additional houses means that obviously it mitigates that risk in terms of increased demand on that temporary accommodation. So that, in a sense, is the current model. What we also have is the announcement of the local housing fund that we've also put an expression of interest in, where the council have been awarded £1 million. And that's a contribution towards buying more houses as well. So, and that is predominantly for then the refugee side of things. So if people obviously do come forwards, then we've got potentially houses to be able to house refugees in as well.
Unfortunately, we won't be able to buy very many. Not really.
But that's why we put, I mean, we a few years ago, we put £1.2 million into the capital programme, and that managed us to buy about 5 or 6 properties. Property prices were a bit lower then. So we've currently got those assets. So if we hadn't done that, we'd be paying more expensive B&B accommodation. So the £2 million we approved on Monday will hopefully enable us to buy 7 or 8 more properties. And each time we do that, it saves us in terms of the expensive B&B costs. So it pays for itself, even though we're borrowing money to build, to buy these houses, the net saving is still beneficial to the council. So if this works and we fill these up, then obviously we'll probably look to do a few more as well. And it means that you also have an asset that's going to grow in value as well. So you're not just putting money into bed and breakfast accommodation and it becoming a lost cause.
So we're going back to the basic good old council house again, aren't we? Yeah.
But we are restricted in terms of holding housing as a local authority, because we can only really hold housing for temporary accommodation or affordable housing needs.
So your housing opportunity then, that
hopefully opens that up into then being able to do more different types of housing, because if we wanted to hold housing and say provide key worker accommodation, because obviously we know a lot of businesses struggle to recruit and retain staff, and also local hospitals struggle to obviously house and fill posts for doctors and nurses, because it's not the posts they can't necessarily fill, it's the fact they've got nowhere to be able to come and live. So if we can provide potentially some key worker accommodation, that means that maybe the NHS, the local employers, can actually benefit from that, because they've got more affordable local accommodation, but obviously means they can potentially then fill those recruitment posts. So we've got some units of accommodation that will come on as part of the Balfour Street development, as part of the Future High Streets Fund. So what we would hope to do is have those outside of temporary accommodation, so they might be at either market rent or a lower rent. But the housing opportunity, we need to make sure we've got the right type of model in place to be able to hold them for that purpose. So if they were to become, say, key worker accommodation or some of the units, we couldn't do that under our existing housing powers at the moment, which is why we would need to look at a different type of delivery model for those.
I think that's a good thing, Julie Board. Yes,
So
thank you.
councillor York and then councillor Walker.
Thank you. I just wanted to congratulate you and the team on being able to produce a balanced budget, which does include lots of, obviously, capital project plans, commercial plans, forecasting for increasing demand on services, and, some of that, obviously, just working in the dark, especially where, government funding is concerned. So I'd just like to extend my thanks to you and the team.
Thank you.
One last, hopefully quick question is, how much is it costing us at the moment per person per night for temporary accommodation?
If we, depends where we place, because we have different types of accommodation at the moment. The more expensive bed and breakfast accommodation ranges from between 75 and maybe £90 a night. So if for example, one person went into bed and breakfast accommodation for the whole year, so if you multiply that by 365, you're on the best part of maybe 25 to 30,000 pounds a year. If we buy a property, and also you've also got to think about the well-being of that person, not only because they've obviously come to us in need of temporary accommodation, but if you're putting them into a Premier Inn or a travel lodge for a long period of time, that doesn't really help their well-being. It's, I think, putting them into their own accommodation where they're self-sufficient and they feel like they've got some sort of living accommodation. And it's not only good for us financially, because it means we're saving the £30,000 that we're putting into the bed and breakfast accommodation. Even if we're incurring the borrowing costs to buy this house, with some maintenance, it still saves us best part of £8,000 to £10,000 per property per unit. So it saves us on the council tax bill, but it also means, more importantly, that person who's come to us with a housing need has actually got a much better outcome and a stepping stone then maybe into getting them into some more permanent accommodation. So that's the reason that we've done it, and it's been successful with the small number we've done before. This hopefully enables us to do that a lot more.
At the beginning of our term, I seem to remember at one point we had 0 people going into bed and breakfast. I mean, I would like to see that. Going back to that would be amazing.
Yeah, and bed and breakfast really is the sort of last resort. So Jeremy and Sarah and the housing team, obviously we've got our own units of accommodation, but we've got tenancies with Beaufort Walk. We've also got agreements with sort of local holiday parks as well, so Brooklyn Holiday Park. So we do try to utilise those accommodation sources first, and then really it's then the bed and breakfast accommodation is sort of the last call. But if the demand is growing and you've used all of your other outlets, bed and breakfast accommodation then really is the only source you've got. So that's why we need to look at trying to reduce that need on bed and breakfast accommodation, and have everybody either within flats, houses, much better uses of the accommodation that we've got.
I mean, what percentage of homeless,
Just wait.
about the chairman,
Just
sorry,
wait.
beg your pardon, chairman.
I'm learning fast.
I've got a reputation. I was just going to ask, what percentage of the homeless do you think you're actually helping to accommodate? Because it's obviously increased massively, isn't it, the last?
It has, yeah. I can't remember the last numbers we had. It was certainly in the, I'll just get the report up that went on Monday, because there were some stats in there. So the report that Jeremy brought on Monday, which was the first item on the agenda, which obviously was asking for the £2 million, also gave a temporary accommodation and homelessness update. So it's,
It was on the press release.
it was, yeah. So it was around 1,500, I think was the demand. So we had 15, yeah, in the period of April 22 to January. So that's what, 10 months, really. We had 1,485 presentations made. Of that 1,400, not all of the presentations then turn into sort of either prevention or temporary accommodation, because they try to triage that at that point and try and help them immediately without then going down the sort of the next stages. So of that 1,485, obviously they try and mitigate those as soon as possible. 225 then had prevention outcomes, successful prevention outcomes. 356 of those went into temporary accommodation. So quite a significant number of those that presented, then sort of a good quarter of those went into temporary accommodation. But 1,500 presentations in 10 months is quite a significant number.
Do you think the remainder were sorted?
Yeah, I mean, that's to say they try and triage them as early, so they're trying to help them immediately, so that hopefully they don't get into that need of then temporary accommodation, and they can hopefully resolve that, because we do have other schemes where we can try and prevent. So we have like a housing deposit scheme where we can obviously help people either maintain their relationships with landlords and help financially to try and stay within their current accommodation types. The 1,500 presentations was a similar number to the year before, which we were surprised at. We thought the number might be higher. I think the type of presentation probably has changed a bit, because obviously the eviction notices and reasons for sort of presenting obviously are also shown in the table that Jerry presented as well. So sort of quite a few people were sort of either with friends and sort of then unable to accommodate, so that number had increased. But the Section 21 notice number wasn't that high now, which was quite surprising. So I think the work the team are doing to try and sort of triage and mitigate at an early stage intervention has obviously helped, because it hopefully maintains their relationships either with their landlords, if they can help them with the housing deposit schemes, and it hopefully means that they can stay in their accommodation without the need to then present as homes.
Is that being published in the press and things? It'd be quite useful to flag it up.
I mean, the report was in the public papers on Monday, and they've also done a press release on the back of that in terms of the £2 million investment in the housing. So some of the stats and the data that were in the report were included in that press release. So, but it's quite important to understand, like you say, the reasons behind people making those presentations as well. So yeah, so have a look at the report that went. It's quite interesting.
Yeah.
That was very helpful. Councillor Jenkins.
I learned recently of a builder who, in spite of advertising an affordable home over a period of some months, wasn't able to move it, and therefore it was being offered to other parishes rather than the one in which they were building. I guess the question that comes from that, does that represent an investment opportunity for the council? The affordable homes?
It does. I suppose we've got to be careful that we're not taking, because obviously it is still from the same stock. So obviously we obviously want local people who obviously need affordable homes to be obviously have access to that stock. But certainly part of the conversations the team have about working with towns, parishes, obviously Community Land Trust is about obviously access to some of those units of accommodation, the newer builds, etc. So accessing properties within sort of new build opportunities is obviously something the team are looking at. So Jamie and the team do have discussions with builders. So I think it is something that is an opportunity for the housing team to be involved in. I suppose the driver is to make sure that local people with local housing needs have access to those properties. That's obviously the strategy of the team. Obviously, we also have our commercial hat on in terms of obviously getting hold of properties to be able to then maybe think about a financial return for the council, but ultimately it's our housing priorities that becomes the bigger priority for us. I think where we look at the future housing opportunities and those delivery models, that's where we might then think a bit more commercially about providing the affordable housing is protected and people have got those right access to the affordable properties. If there's then market rent properties that we might be able to be interested in to then bring about financial return, then that provides an extra opportunity for the council. So I think there certainly will be future opportunities that we've not been able to explore at the moment just because of the restrictions we've got as a council to look at properties of a higher value.
So what would be the process in the case that I was aware of?
Yeah.
Would the builder, is the appropriate channel that the builder would come to council to ask whether it's of interest, or would you be actively looking for them?
I mean, certainly Jamie and the housing team are always actively discussing with local developers and builders. So if there's, I mean, and she may even be aware of the case that you mentioned, but if not, certainly important then for him to get in touch with our housing team and Jamie Jays. So I think certainly if they're not in dialogue already, it's certainly worth them having a conversation.
Other than the cost of the building, it would be much more sensible to buy new buildings than, Victorian ones, put it the other way around, because the uptake and problems in trying to come up to the standards of which we require to, because so much energy is lost. The consequences doesn't help the planet, saving the planet. So it's quite a complex job you're doing, isn't it?
Yeah, and obviously the ultimate aim is to try and get people into accommodation quickly. So what we don't want, I mean, obviously, yes, we could pay less for a property, but that property might need renovating, or it might need some enhancement works doing to it before we can put people in there, which obviously doesn't solve the problem for us. So the aim really is to get accommodation that's fit for purpose. People can move in straight away, because then it means that we solve challenges that they've had, but also it's more efficient for us in terms of ongoing costs, because if we've got a newer property that's more energy efficient and also needs less work into it, our maintenance requirements ongoing are less, and therefore that's better for us financially and also operationally.
Members, are we ready now to endorse the recommendations or otherwise?
I'll move.
Second, all those in favour? Thank you.
Thank you, members.
As always, much appreciated, John.
That's all right. Pleasure. Thank you for your questions.
Kelly, I think we covered a lot now, haven't we?
Well,
Except the last
just the
item on the agenda.
Yeah.
Member Finch, work programme. Any comments, members, please? Oh, Kelly, any South West Water?
I was just going to ask if I could update you on that.
I would be very pleased if you do. I'm sure the rest of us will agree.
I am in communication with the appropriate person from South West Water. They are happy to come along to a meeting in March, but I've had difficulty trying to establish a convenient time to speak to them on the phone. So I am trying to work forward with it, but it's just a case of when they're available to speak to me.
And the second one, speaker was?
Sorry, South West Water.
Yes, but you put in
I'm
a
trying-
caveat, which I didn't
I'm
quite-
trying to arrange a meeting with them on the phone to discuss the requirements.
Thank
And
you.
I've sent an example of some questions that I was provided with by some members
Yeah.
when I was trying to arrange this last year.
Yes,
But I've not been able to speak to the lady directly yet, so I'm
Yeah.
chasing at the moment.
thank you.
Kelly?
Good. I think that concludes the meeting.
Thank you.
Just need to note the work programme, Chair.
Pardon?
Just need to note the work.